Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast, the vapest show on earth. Andrew Hall here, Ben Nye joining me. Ben, how's it going, man?
It's going well.
Good. Today we are going to talk a little bit about Europe. Bunch of situations going on there. Going to talk about a couple companies, in particular RBS and Deutsche Bank, but also talk about some big votes that just went down. A big vote in Italy just went down, and it was a no vote. They voted no to a referendum, and are you surprised by the vote? And
I'm not surprised.
I guess we should lay it out a little bit. Basically, a referendum was proposed that would basically allow those in power to kind of appoint, if you want to think about it in U.S. terms, kind of appoint the senators or the congressmen, so to speak, for the electorate body. So you basically would vote for the top rung of leadership, and then they would kind of assign and fill almost a cabinet, and would in theory put a lot of pressure on voting for the guy you want at the top, because he's going to have a little bit more power.
I mean, it's an interesting proposal because it seems like everything this year has been trending toward more populist power, more power for the populist. So for the Italians to actually propose and think they were going to pass a law that would give more power to the central government was counter to everything that's been going on this year.
We saw that with Brexit. We saw that with Trump. We've seen a number of we've talked a little bit around the office, just huge populist movements. And coincidentally or not, the timing of it has been kind of one after the other. It didn't seem like this was going to pass.
No, it didn't. And that was a crazy thing to me, is that people actually thought it was going to pass, and Matteo Renzi, the prime minister, said he was going to resign if it didn't pass. Like that was going to do something. And then, coincidence, he put in force the first public sector wage increase a week before the election. But whenever you have, usually in the past, it was you had 40% or 35%, 35%, and then there's this big chunk of undecided voters. And in the past, what's happened is that undecided voters, and we saw this one in the Scottish vote a couple years ago, the undecided voters tend to break for the status quo. But what's happened this year is that all of a sudden, people are becoming okay with the fact that, maybe it's not such a bad thing. And people are becoming much more comfortable going against the status quo, and that's emboldening them to make these decisions. So it was a similar thing that we saw in Italy this time around, because I think it was the polls varied a lot, but some polls were saying about 40% said voted no, 30% would vote yes, and then about 30% was undecided. What happened was a lot of those undecided voters just broke for the no vote. And that's becoming more and more of a regular thing. We saw that with the Trump election. We saw it with Brexit. So that was something that's really interesting to me, and it's an important trend that people are less scared of changing up and shaking up the status quo.
And I think it's the other trend that we're seeing here is kind of a move a little bit away from the big, whether you call it government or conglomerate or whatever you want to call it. With Brexit, obviously, it wasn't so much a slap in the face of big government as it was, we don't really want to be involved in this larger union. Had nothing necessarily to do just with one country. Had to do with that. In the U.S., I think you saw kind of a move away from that, a move towards, at least in theory, a more conservative candidate and somebody that was going to put some restrictions and be better for business. In Italy, what are the economic outcomes from this? They're not necessarily reading it as any kind of indicator as to what Italy wants to do relative to the EU. So it's not necessarily being read through as, hey, this is a precursor for an Italian exit. I don't know what their pun is for that. But what are you kind of
It's a leave.
It's a leave. I like Italy. Italy's better than Brexit, I think.
I think so too.
Way better.
I can't take credit for that, unfortunately. But we'll take credit for bringing it to the masses through the podcast.
Yeah, exactly.
We have so much following on this. So with respect to Italy, it shouldn't be taken as a vote to leave the EU. People who are taking it that way, I think, are jumping to conclusions because there did do some polling at the exit polls, and they said, even people who are voting against this constitutional referendum were still saying that we support the EU, and rightly so. I mean,
Right.
Italy would be devaluing its currency like crazy if they had their own currency. They would not have access to the Germans continuing to bail them out. So Italy, I mean, very much in their self-interest to remain in the European Union, because they do have that backstop with the Italian banks. So it should not be read as that Italy will leave, but it is interesting that they do continue to want to retain power. And then this was a vote in the opposite direction. So
Right.
let's say a lot of the votes have been starting in the middle and going one way. This vote started in the middle and was trying to be pushed to the other way and then just stayed in the middle. So
Yeah.
status quo actually was maintained in Italy.
Yeah, and still just kind of one of those all-time bizarro moves by
Right.
Renzi to basically say, hey, I'll resign
Yeah.
if this doesn't pass, while simultaneously proposing something that was against the trend that we're seeing globally
Right.
and obviously against what his constituents wanted. So kind of a bizarro move there.
Right. So if we look at the economic consequences of this, people wanted to jump to conclusions. And initially, and you saw euro move rapidly and the Italian bond yields spike briefly, but that was very short-lived, and it seems like these movements are becoming shorter and shorter in terms of how long they take to play out.
Yeah.
We saw Brexit took a few weeks before markets came back. With the Trump
took a couple
election,
hours.
it took a couple hours, and now it's like almost instantaneous.
Yeah.
So that was pretty interesting and encouraging if you want to invest in Italy. But you would say that there would probably be less foreign direct investment into Italy than there would have been otherwise. If Renzi had consolidated power, people like to deal with one person. Investors like to deal with one guy who they can kind of handicap and they can buy off. So when you don't have that, there's going to be a little bit less foreign direct investment. But I don't really think it changes the picture dramatically in terms of where Italy goes over the next couple of years.
There we go. So staying over in Europe, talking about a couple banks, RBS starting to climb out of this hole a little bit as we kind of continue to, I guess, a little bit of a follow-up to Brexit and some of all this action. RBS over the $5 mark.
Yeah.
So starting to climb out. What are you seeing with RBS in terms of, what's the play here? Is this people slowly moving on and gaining confidence in it? Is it a valuation story? Is it strong fundamentals? What's happening with RBS?
I think RBS, so backing up a little bit, recent news, RBS was recently said by the Bank of England that they failed a test that they had, but that used data from the end of 2015. BOE said, you have to make these changes, and RBS has been making those changes this year. So it was backward looking, and RBS sold off a little bit, but has since continued to rise. And I think a lot of the reason it has risen is there's just more economic optimism in Europe as a whole. So I took a look. Citigroup comes out with an economic surprise index for a number of different countries, and if we look at some. In the U.S., the economic surprise index is now a positive 30.1, which is a lofty level. It was negative 40 in March. And positive 30 is a good level. It's not an outstanding level by any means, but it's a solid level. The economic surprise index in Europe was negative 71 in March. It is positive 66.1 right now. So it's a dramatic improvement relative to where expectations have been in Europe. Now, historically, when you get into the 60, 70 range, that's kind of where economic surprise tends to top out.
Right.
But you do have Deutsche Bank rally 50% from $12 now over $18. RBS is flirting with that 550 mark. 550, I think, is even more important in terms of a US dollar per share basis than the $5 mark.
Right.
It's been a point of resistance for a while, and if it can break above 550, the technical people will really glom onto that and say this could be set up for being one of the biggest winners in 2017. Something that was so beaten down like this.
Yeah, and we would certainly like that. We own some RBS. You mentioned Deutsche Bank rallying from about $12 to $18 really quickly.
Right.
How much of that was, I guess we talked about this, I feel like a little bit earlier in the fall, about how there was a lot of headline risk, a lot of beating down of the stock. How much of that rebound would you personally attribute to some economic unrest globally falling off the table, or especially regionally in Europe? And how much would you attribute to the stock was just too beat up to begin with?
Yeah, I mean, I think with Deutsche Bank you have some real problems because they have not been recapitalized. Still have a ton of leverage and a lot of notional derivative exposures. They say it's hedged off, but you never know. But I think the biggest driver for Deutsche Bank is finding interest in Germany. Interest in both, this economy is a good place to invest, and also interest in terms of you actually get paid if you lend money. Because
financial interest.
A few months ago, the German 10-year was yielding a negative 0.2%. You were paying to lend your money out, 20 basis points a year. Now,
Which I think we promised on the podcast to match.
Yeah.
If anybody wants to loan us money, we will take more.
I think we'd still do that too.
Yeah, that's offer stands. Offer stands.
But now the interest rate is 35 basis points on the 10-year, which is still next to nothing, but at least Deutsche Bank is actually making money on loans that it has. So that is probably the biggest piece of good news. And when you're talking about interest rates that are that low, when you're looking at a bond curve, when the interest rate moves by a fraction at a very low level, that has a much bigger impact on price than it does if it moved by a fraction at like 3%.
Right.
Because you have the whole convexity and the second derivative. So I think that's probably the biggest improvement for Deutsche Bank. And then when all of a sudden the banks in Germany are better, that has a self-fulfilling prophecy with the rest of Germany, because if Deutsche Bank doesn't go under, then all of a sudden Germany is a much more attractive place to invest.
Right. Yeah, it starts kind of get that cycle.
Exactly.
That cycle going. Ben, anything else to add on Europe?
That's it. Watch for the economic surprise index. We are at this tough level, but if it continues like this, there's a lot of beaten down names.
Very good, very good. This is the Investing Podcast, the vapest show on earth. Y'all have a great day. We'll talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.